Right, everyone, here we are with ticker symbol IDEX, Ideanomics Inc. And to all my first-time viewers and investors, welcome to my channel. Invest for tomorrow. To all my subscribers, welcome back. And let's jump into this chart. So Ideanomics Inc. has actually had a run, right, previously to this slight bearish movement. Now, we are seeing Ideanomics hold itself up. This is one of the lowest points in this sideways movement. Obviously, the highest point was the peak up here at 475, and the lowest point was down here at around 221, 220. And these are 2 points of reference I've told every single investor to keep in mind. But before worrying about way up here at 475, I tell everyone to pay close attention to this point as a resistance here at 372 to 373, due to the fact that that is the highest point before this dipped. And then this is the lowest point reached. But in this sideways movement, the lowest point reached was 250. This is doing pretty well at holding itself up and going in a sideways direction. And it's looking like the bulls are trying to fight to get back over the 50-day moving average. So there's some important cues here to watch closely based off of how this is reacting. So this support is still an important support. I want every single investor to be aware of that and pay close attention to this support. I would actually still state that this is the support to watch because this is such a narrow stretch. We're going to move these positions, right, and these cues in just a moment, but 250 is still highly important because that's the lowest point, like I said, in the sideways movement and the lowest support level before reaching down here at 220, 221, give or take. Now, we are in a position currently. It's showing us here on the chart 281, 280, and then it says the market price is 277. So, give or take, it's 277 to 280, and the 50-day moving average is 282. So, every single investor, I want you guys to be aware that there's a tug of war going on here. The bears have been dominating it, right? Because when you look at it, this is the only time that the bulls were able to break through the 50-day moving average. But it's looking like if the bulls go ahead and bring themselves hefty and strong, they can bring this in an upward momentum before the bears appear, right? Because the bears will then tear this back down. So we need to watch this closely. And that is why these points of reference where we're at right now, this is probably the first resistance level, 291, right, to keep in mind. And you could see that it was on its way up and it touched it, and when it worked its way up, it leveled off on it, and then it started to fall. So 291 is very important for the bulls right now to break through. I want every single investor to be aware of that. 250 is the lowest point in this sideways movement. Super important as well. So write those 2 points of reference down and keep them in mind. But let's look at this very narrow stretch here. This is super narrow. I mean, so narrow that they're going to be like 5 cents away from each other. It's going to be pretty narrow. But now let's go ahead and look at this correctly. So 291, super important. I want every single investor to be aware of that. 291. So write that down. You're going to kind of break down your chart, or you're going to have it all written down that these numbers are going to be so close, but they're all going to have some importance over the chart. And let's go ahead and see the highest point reached in this whole entire point of reference. So again, we're give or take 277 to 281 in that area right now. This is live, and this is based off a 30-minute time frame, so I don't want anybody to get confused. But this is the current price that we're seeing here, and this is where we're at. If this breaks through this support level, which is 275, then you have the 250. You can watch how this is reacting between 250, right, and 275 within that area. And you're in bearish territory, so I would suggest to all investors to pay close attention to the behavior of the stock. How quickly is it moving to newer lows, or are the bulls trying to reappear? Super important to keep in mind. The 50-day moving average is 282. that needs to be broken through so that the bulls can get back up into bullish territory. So I want every single investor to be aware of that and pay very close attention to that. Super important for the bulls to do so. Now, the highest point that they reached before the fall and trying to get into bullish territory was 315. So this is where 291 comes into play and is super important, because that's the first resistance level where they got rejected, and they also had a support within this candlestick. And if 291 gets broken through, you know that this is pulling further away from the 50-day moving average and slightly starting to work its way up to newer highs. Now, once that's accomplished, then the bulls need to go ahead and break through 291, turn that into a support, and start to work their way up to 315, turn that into a support, and start to pull away, further away from the 50-day moving average to start to work to newer highs, newer resistance levels, and get further deeper into bullish territory. So I want every single investor to be aware of that. That's why I'm pointing out the 291. You have like a midway point. Once it's broken through the 50-day moving average, 291, the true resistance level that the bulls need to break through right now is 315. Turn that into a support so they can reach new highs, new resistance levels, and pull further away from the 50-day moving average to maintain that momentum. I hope that with these cues, you guys are well equipped for Monday's trading day. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications, not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and in that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. As you see here on the graph, these circles are the dates that the pumps have happened, and I use them as examples to show you guys how much the stocks have risen, and the S&P 500 index rose on those dates. And the reason why it's rising is due to the fact that the Federal Reserve is pumping the markets. On these dates, the charts and the dates speak for themselves, as we can see it here, and I break it down into more detail in the video. But just to summarize it, on these dates, the S&P 500 rises, and there's individual ticker symbols rising up with it, anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up. And these individual ticker symbols are giving you back profits. These are profits. And like I always say, profits are profits. Whether it's $1 put into the market and you get back $2, you've put in an initial investment and you got back more than what you started with. That's what it's all about. And also in the video, I go into further detail showing you guys these dates and showing you how much it rose. Like for example, this was one of the last pump dates, and the lowest point that it reached was down here at 35.11, and the highest point reached was 35.57. That's like a 40-point jump. And here we're seeing the same thing. It went down to 35.88, and it rose up to about, I'd say, let's see, this is all still in the same day. It rose up to about a total amount of 36.23. When you do the math, that's almost a 40 to 50 point jump. And there's individual ticker symbols rising up with this. Now, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to inform every single investor on the great news, on the opportunity to maximize profits and minimize losses. You have to do your due diligence and research, but these charts and the dates speak for themselves. I mean, this was probably one of the largest jumps that I've seen in the last couple of pumps. And it was down here at 33.02, and it rose up to about 33.88. That was an 80-point jump. There was probably ticker symbols rising up more than $3 per share on those dates. And even on these dates, there's individual ticker symbols rising more than $3 per share. Check it out. See for yourselves. And my best advice is look for ticker symbols that may be resembling the behavior of the S&P 500 index, and you'll be able to go ahead and give it a shot. Check it out. Again, I'm not there to tell you to buy, sell, or hold anything in particular. I'm not there to guarantee you profits. I'm just here to go ahead and share the information along with every single viewer and investor. The video should be popping up soon. If you haven't seen it already, pop up. There is the link down below in the description. Thank you guys so much for watching, and let's make some money.